Hello everyone. I am Aarti Kothawde, lecturer of Aryan College of Arts, Commerce and Science, Camp Pune. Today, I would like to explain you about the hidden adjustments of final accounts. See here, there are 4 hidden adjustments are given. Actually, hidden adjustments are those adjustments which are given in trial balance, but it has not been given after the trial balance. Likewise, we have already discussed in my last videos that explanation to various adjustments that has given after the trial balance. But now we are going to learn the adjustments which are given in trial balance. Now the first adjustment, salaries or rent paid for 10 months. Actually, we have to give the effects for whole 12 months. So whenever we are paying salaries for 10 months, then for the remaining 2 months also we have to add, and that is called as the outstanding salaries or the rent. That outstanding salaries for 2 months we have to add to the profit and loss account, and second effect will go to the balance sheet liability side. Second adjustment, insurance premium paid for 1 year ending 30th June 2019, and our accounting year ends on 31st March 2019. Here again the premium paid in advance for 3 months, that is April, May and June. That 3 months advance paid is called as the prepaid insurance premium. So again that we have to deduct from the insurance premium paid from the profit and loss account debit side, and the second effect will go to the balance sheet asset side, that is prepaid insurance. Third adjustment, advertisement expenses for years. Then this is again we have to show 1/4 amount of advertisement expenses on the debit side of profit and loss account. It means it has been given for 4 years paid, then we have to show 1/4 amount to the outer column and 3/4 amount of advertisement expenses to the asset side of the balance sheet. Then rent received for 11 months. Now this rent received for 11 months means again we have to receive the amount for 12 months, but for remaining 1 month we have to receive, that is income receivable. So again we have to add the proportionate amount of rent for 1 month to the rent received on credit side of profit and loss account, and balance sheet on the asset side. The students, these are the adjustments I have discussed now, but whenever we will solve the practical problem, definitely you will come to know how to give the effects. Now today we are going to solve the problem, but before solving there are certain steps to remember and you have to apply while solving. First, prepare the necessary accounts including the working notes. Necessary accounts means trading account, profit and loss account, partners capital account or partners current account, and the balance sheet. As well as after the balance sheet you have to write down the working notes also. Then place some mark on trial balance items for external as well as internal adjustments. Go through trial balance items and give only one accounting effect sequentially. Go through the adjustments and give 2 accounting effects. Close ledger accounts in the working notes except capital. Then with the help of trading account, we can find out gross profit. Transfer this gross profit to the net profit with the help of profit and loss account. Find out the net profit. That net profit, we have to transfer it to the individual capital accounts, and then find the closing balance in capital accounts or the current accounts, and that balances we have to transfer it to the balance sheet. And definitely after solving the trial balance debit side, credit side, adjustments, hidden adjustments, and then definitely our balance sheet will get tally. Now see here, there is a problem. First I will read the problem, and in this problem I have already tick marked the adjustments. I will just tell you the tick marks with the blue and the red. So Daya and Kshama are partners sharing profits and losses in the ratio of 1:1 from the following trial balance and additional information. Prepare trading account, profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. Now here, first point is the ratio. I have highlighted with the blue marker 1:1. It means it is equal ratio. Whatever the profit we will get net profit, that profit we have to distribute in equal ratio. Suppose a 10,000 net profit is there, then 5,000 to Daya and 5,000 to Kshama. Next, I will read out the debit side of trial balance. Stock on 1/4 or 1st April 2018 is given rupees 65,000. Now always remember, after preparing trading account, profit and loss account and the balance sheet, first we have to write down the 5 items by default. That is the opening stock, to purchases, buy sales, then buy closing stock, as well as closing stock in balance sheet asset side, capital, only opening balances, Daya and Kshama in under partners capital account. Then we will start solving the problem. Now opening stock is given, bills receivable, that bills receivable comes under the balance sheet asset side, wages and salaries comes to the trading account debit side, sundry debtors balance sheet asset side, bad debts profit and loss account debit side, purchases trading account debit side, motor car balance sheet asset side, machinery balance sheet asset side, audit fees profit and loss account debit side, sales return profit and loss account, deduct from the sales, discount profit and loss account debit side. Remember students, whenever discount is given under the debit side, debit balance of trial balance, then we have to debit to the profit and loss account, and discount is given on the credit side, then it is our income, we have to credit to the profit and loss account. Then come to the building balance sheet asset side, cash at bank balance sheet asset side, 10% investment balance sheet asset side, advertisement paid for 9 months. Profit and loss account debit side, royalties, trading account debit side. Then come to the credit balances of trial balance, general reserve, balance sheet liability side, capital, Daya and Kshama, balance sheet liability side, or if you have prepaid the partner's capital account, then we have to transfer these balances on the credit side of the capital account by balances brought down. Creditors, balance sheet liability side, RDD, that is the reserve for doubtful debts. Profit and loss account debit side, sales, trading account credit side, outstanding wages, balance sheet liability side, purchase returns, trading account debit side, deduct from purchases, and discount, as already I told you, profit and loss account credit side. Here I have just read out the problem and where the effects will go that I have explained you. Now these trial balance, debit balances and credit balances gives only one effect that I told you. Now I am reading the adjustments. This will give the two effects, and after reading one by one adjustment, we have to just tick mark to the debit side or the credit side of the trial balance. Closing stock. Now there is no item in trial balance, so we have to remember that for closing stock we have to give the two effects, that is trading account credit side by closing stock and balance sheet asset side. Depreciate building and machinery at the rate 5% and 3% respectively. Then we have to give the tick mark to the building and the machinery. See here, I have already tick mark with the blue pen building and machinery. It means while solving the debit side, we have to just put the machinery amount in inner column, and whenever we will solve the adjustments, that time we will deduct this depreciation from that particular asset. Bills receivable included dishonored bill of rupees 3000. Again, we have to tick mark to the bills receivable as well as the sundry debtors. I have tick marked with the blue pen. Then goods worth rupees 1000 taken by Daya for personal use was not entered in the books of the accounts. Now we have to tick mark to the Daya. See here, I have already tick marked with blue pen, and we have to give the two effects also. By goods withdrawn by the Daya for her personal use, and second effect, we have to give the partners. If we have prepared partners capital account, then two drawings under the Daya's capital account, or you can deduct from the balance sheet liability side from the Daya's capital account. Then write off rupees 1800 as bad debts and maintain RDD at 5% on sundry debtors. Here you have to concentrate more and more, because for sundry debtors already I have tick mark with the blue pen. Now I have given the three highlighters with blue. See here, for bad debts as well as for RDD, and again for the sixth adjustment also. and this will go to the profit and loss account debit side. I have already explained you in detail in my previous video about the bad debts adjustments, because this is very important. And students, remember that whenever you will write the sundry debtors amount, you have to leave 6 to 7 lines and then start writing the other assets, because many times there are adjustments related to debtors, that is the bad debts, RDD, reserve for discount on debtors. Then goods of rupees 6,000 were sold, but no entry was made in the books of the accounts. This is called as the unrecorded sales. Means sales made during the year, but it has not been entered in the books of the accounts. Then we have to add to the sales, as well as simultaneously our debtors will also get increased. So again we have to add to the sundry debtors. Now, after reading adjustments and tick mark to the trial balance, you have to be very careful about the hidden adjustments. Just now I explained in the previous slide that 10% investment I have tick marked with red pen, as well as for advertisement also. These two are the hidden adjustments. Means what we have to do, on 20,000 we have to calculate the 10%. It comes to the 2,000. That 10% is an income for us, so we will credit to the profit and loss account by interest on investment rupees 2,000, and second effect will go to the balance sheet asset side. 10% investment 20,000, add interest on investment 2,000, so we will get the 22,000 total. Then advertisement paid for 9 months. Here again advertisement paid only 9 months, but we have to pay for the 12 months. So that 3 months is nothing but the outstanding expenses. So how we will calculate this 4,000 on 4,500? Because this 4,500 amount is given for the 9 months. So 4,500 divided by 9 into 3, then you will get the 1,500. Then we have to add this and show it to the profit and loss account debit side. That 1,500 again we have to show to the balance sheet liability side, outstanding advertisement. Students, don't worry, I have already shown the working adjustments in working notes. In the next slides you will come to know. See here how we are solving this problem. I have already highlighted some items. This yellow highlighting is nothing for the adjustments, and wherever the red mark is there, that is our answer, means exactly what we have found out. This gross profit, net profit in this slide. Now we have to write down in the books of Daya and Kshama trading profit and loss account for the year ended 31st March 2019. See here, I have circled it DR for debit and CR for credit. This is for your understanding purpose. I have done this because you should not forget to write DR for debit and CR for credit. Now, already I told you where the items will come. This opening stock, 2 purchases, less returns, 2 royalties, 2 wages and salaries. By sales, add unrecorded sales, less sales return, and buy goods taken over by Daya for personal use. By closing stock. See, if the credit side is more, then we get the gross profit, as we got 1,09,500. I have tick mark with the red pen. That gross profit, we have to transfer it to the credit side of profit and loss account. See here, again I have tick mark here with the red highlighter, 1,09,500. Under the profit and loss account also, we have to write down the particular items, that is by interest accrued on investment 2,000, by discount 1,800, to advertisement, to audit fees, to depreciation, to bad debts. There is one formula for bad debts. Always write down this formula first and then solve the problem. To discount allowed 2,300, and here also the credit side is more and we are getting the net profit. And see here that net profit we have distributed in equal ratio, that is the 44,311 and 44,310 to Kshama. This net profit we have to transfer to the balance sheet liability side. See here, again I have tick mark with the red highlighter. Under the capital Daya 1,60,000, we have added 44,311 less the drawings 1,000, and we got the 2,03,311 in the outer column. Then we have written the capital of Kshama 1,20,000, added the net profit 44,310, then general reserve 14,500, outstanding advertisement expenses 1,500, creditors 98,000, outstanding wages 700. Then if we will go to the asset side, always write the fixed assets first, then write down the current assets. As you already know, fixed assets, building less depreciation 5% we have deducted, machinery less depreciation 3% we have deducted, then the bills receivable less bills receivable dishonored, motor car, cash at bank, closing stock, then sundry debtors. I told you to leave many lines because we have to give so many adjustments over here. First the bill of dishonored, so we have added, then unrecorded sales we have added, the bad debts new we have deducted. New means it is given in the adjustment. Then RDD, reserve for doubtful debts, at the 5% we have deducted. It is also given in the adjustment. 10% investment, add accrued interest, and we got the 22,000. And after solving, this type of problem, our balance sheet should get tally. See the total amount 4,82,321 in both the sides, liabilities as well as assets. And here we can conclude that our problem is correct and balance sheet gets tallied. Now for your references, I have made the working notes. These working notes you also have to prepare because calculation part we have to show to the teachers also as well as for our reference also. If you will observe, the sundry debtors amount 1,32,500, add bills dishonored, add unrecorded sales, less bad debt, and the main part is RDD. RDD is calculated on 1,39,700. Means this calculation part is always the last because after having the adjustments related to debtors, first we have to complete that, and whatever the balances of debtors will get, on that balances we have to calculate the RDD. Then second defect, already I told you to write down the bad debts. Old means in trial balance given, add bad debts new means in adjustments given, add new RDD means just now we have calculated 6,985, and less RDD old means it is given in the trial balance. So this is the one formula. We have to just put the amounts under the formula, then it will become easier for us to solve or write down the amounts. Next slide. See here, I told you that hidden adjustments, interest on investment and advertisement paid for 9 months. See how we have calculated on 20,000 into 10 upon 100, we get the 2,000. That is for whole year. I have just highlighted with the yellow color. See that 2,000 will go to the balance sheet asset side and the profit and loss account credit side, because we are getting the interest as income on the investment. Then go to the next, advertisement paid for 9 months. Students sometimes may get confused over here that how to calculate this. See, it is already given for 9 months. So 4,500 is divided by 9 into 3 months we have to calculate, then we get the 1,500. That 1,500 we have to add to the particular advertisement, that is 4,500. We get the 6,000. Then for 1,500 we have to give the two effects, profit and loss account, add to the advertisement, and balance sheet liability side, because these expenses are payable but not paid. That is why it becomes our liability. I hope you must have understood how to solve the problem. Whatever instructions I have given, that you have to follow, and then definitely our problem will get tally. Thank you very much.